Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. It used to be 5 in 5 minutes. I'm going to do 5 in 6 minutes because 5 minutes is just too quick. So let's get going. Let's look at the euro versus US dollar, and we take a look at the low from November of 2012. It was 126.60, right? Let's go to the hourly chart now and take a look at the 126.60 level. And that's where the high came in on this hour just a couple hours ago. And so we are finding some resistance against that level, also finding resistance against this trend line right here. The problem is we found some support against the 100-bar moving average, or 100-hour moving average below. We also found support against this yellow area earlier today. This yellow area has a number of different lows right there. So we did find reasons to buy. We also find reasons to sell. And if you're inclined to sell, you want to sell against this level. If it goes above it, look for a move toward the 38.2. And we could get up to this 47 level. But if it holds against this level, you could see a rotation. What you want to see is a rotation below the 200, the 100, and then get below this 71 to 84 level. And it's clear sailing to the downside for the euro versus US dollar. But we need to get below those levels in order for the bias to turn more negative, okay? And until it can get below those levels, the bulls still remain in control. Let's take a look at least intraday, okay? I'm not saying forever, but they are a little bit more in control above the 100 and 200. Let's take a look at the sterling versus US dollar next. Now, this currency pair has a little bit of a different story because we are below the 200-hour moving average, and we are currently below the 100-hour moving average as well, or just at it right here. We also went up and tested this trend line and moved above the trend line here. This trend line goes back to this day right here. We had a 1, we had a 2, we had a 3, we had 4 different tests of that trend line. Got a little out of hand here. I'm going to keep the integrity of that line. Went a little bit out of hand here, and again fell below that level. So this trend line is going to be a risk-defining level in trading tonight. Move above it and stay above it. We could head up to this area right here. We have a low, we have a low, we have a high, we have a high. We have the 200-hour moving average at 38.2% retracement, so color that in yellow, and that's where the ceiling is going to be in trading here tonight, or that's where I'd look to sell for sellers in trading here tonight. On the downside, if we're not able to get back above this trend line, then the bears are in control, and we do have the 160 to 160.10 level to get below if we're going to stay below in trading this week. Remember, the 160 level is a 50% retracement of the move up from the 2013 low to the 2014 high. That level comes in at 160.09, and then the 200-week moving average, that's a green line in this chart, comes in this week at 160.10.3. So that area is going to be a key. Going back to our hourly chart, I put that in yellow. That area is going to be a level that we need to get below if we're going to stay below. So keep that level in mind overnight. Let's take a look at the dollar versus yen. And what do I see in the dollar versus yen? I know you see a lot of up and downs. What I see is a box. I see a box that goes like this. And the market's been in this box now for 7 or 8 trading days now, in between 109.52 and 108.32 or 8.32. So that's about 120 pips from the low to high over this number of days. It's actually more than 8 days, isn't it? But the point is that we moved outside of that box. We moved into the extreme. Now, the last time this market went to the extremes here, and even up here and up here, the market failed, and so we're looking for not a failure. We're looking for the market to stay below the 48 high right here, the top part of the yellow area. If we stay below that level, the bears remain in control. We should see a move toward the 108 level and then a break below the 108 level. That's what I'm looking for in the dollar versus yen. As long as we stay below the 48 level, look for a move to the downside. Let's call it 50.51 on the top side. Nice little round number like that, rather than the 48 level. So 50 is our risk, and look for a move below the 108 level to open up the door for further downside in the dollar versus yen. The next currency pair I want to take a look at is not actually a currency pair, but it's gold. Gold, if you take a look at the daily chart, or week, let's look at the daily chart. And we had low here. We see this low right here. See this low right here? Pretty close, right? Let's go forward and see this low right here yesterday. 3 lows in a row down there. They're about 6 or 9 months apart each of the times between those two levels, and that's good news for buyers down there. And buyers have taken the price to the upside in yesterday's trade. Today we had an up and down type of trading day, but we stayed on the hourly chart above this trend line. You see this trend line right here? This trend line connected 1, 2, 3, 4, 5, 6 or so points. We fell below it, we held it, we moved up to it, and then we broke above it and we stayed above it, and we kind of tested it in trading here today. We every time the market goes above the 200-hour moving average, then we have difficulty here, right? Well, it stays up there for a little bit, but difficulty, right? And the same goes true in trading here today. So we're not out of the woods yet in gold. We need to get and stay above this level in order to keep the buyers in control here. And if we're able to stay above the 200-hour moving average and put some air in between the 200-hour moving average and where the market's going, then I think you gather more buyers and we see a further move to the upside in gold. And finally, I'm going to take a look at the New Zealand versus yen. I got 30 seconds. And this currency pair on the hourly chart, we're trying to break through this trend line here. What do we see here? Non-trending. This is a 7 days. 7 days of non-trending market. We just broke below the trend line right here, and we need to test and get through this 84.67 level. If we're able to get below the 84.67 level, I'm going to see momentum. I'm going to see momentum take this down to the 33 level. In early Asian session and get below that level. And if we're able to get below this level at the 84.33 level and then move below the 24 level, which is the 38.2% retracement of the move up from the 2013 low to the 2014 high. Maybe this isn't 2013 low, but that low right there. Then we open up the door for further downside in the New Zealand versus yen. That's what I'm kind of looking for. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.